The bulls try to run away and get sucked back into bearish waters. Can they escape, or do they just look like big salmon? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that if the bulls were able to run past 45.95, they should press up towards 46.20. They went for that at the open, pressing up to 45.98 before failing back down where the bears took control the rest of the day. Now the bears have a setup, and the question is, can they follow through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, the bears have another setup. Can they follow through? Let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and we got the first move down. I told you we had a reasonable 5 waves down here for a wave 1 or potentially even an A wave. We don't have a full 5 waves overall, but in the micro sense, this first move down was a 5-wave structure, so that's a check mark for the bears. Then yesterday we were looking at this as a potential ABC up for wave 2. Now, I did say they could push this higher up towards the 45.95 area, 45.93 area, if they were unable to break down from here. And then we should see the bears try to hold that area above that, and the bulls were back in control and looking towards 46.20. So they did give us the run up overnight. They took us to 45.98, a couple points above the 764, failed at the open, and then it was game over from there for the rest of the day as the bears sold down back into our support area. Now, with the move up, our pivot moved up a little bit from yesterday to 45.65 to 45.57, and they are now officially through that pivot. And so what we look for next is 45.44. Oddly enough, that is the next support level. It's funny how these fibs line up that way. You have these spikes down here at 45.45, basically right here and over here. That would be our next level of support, and then the 45.38 area just under that. So they are through the pivot, and what we would expect from here is continuation at least to the 44 area, so 45.44 here. This would be the 1.0. We would expect a bigger move down toward 45.31, and quite frankly, if they get down to 45.31, I would expect them to extend and push toward the 4,500 level overall. But the key takeaway here, or the key fact, is if they get down to 45.44 and hit the 1.0, then the market becomes in a bearish structure as long as we stay below 45.65 and complete this next 5-wave pattern. Now, the good news for the bears, a check mark for the bears, is this move down into 45.65, the 618 almost exactly, which is your target for a wave 1 of 3, was a 5-wave structure. Then they bounced it back up, and a little bit of a shallow wave 2, but we are selling off of a diagonal, and when that selling truly starts and they're going to break support, it often sells straight down. So we do have a little bit of a bounce for wave 2 and then down through the pivot, which is what you would expect. So another check mark for the bears. They've got a 5-wave structure here for wave 1. Then they got a 3-wave structure up, very clear 3 waves off of this low. You have A, B, C, pretty clear. And then you have another 5 down, and then a bounce, and then the start for the breakdown, as we talk about. And you can call this a mini head and shoulders or whatever you want to call it. But this is how Elliott Wave works, rooted in technical analysis. I say it all the time. So they're pushing down, trying to break through this low now. And again, what we would look for is 45.44 next. And once they get to that number, the key level above is 45.65. The bears need to keep it under that and then have a continuation pattern. And that pattern should look a little bit like this. So to the downside, you should look for them to ultimately continue to the 1, 2, 3, 6 at 45.31. I do believe if they get there, more selling will ensue, but this would be the target you'd be looking for in a standard structure. Then you'd look for a bounce back up to backtest support at 45.55. Then you'd look for 45.11 next to give you the 1618. Bounce back up towards the lower support at 45.45, and then 45.90 after that. So if they can stay down, complete this structure down towards 4,500, 45.90, which is the next big level of support if they break through. If they can get down to there, that will be a pivotal moment. You would expect a little bit of a bounce there for 2 reasons. 1, the 5 waves takes us right down into that support. And 2, that is a major support area overall. We would expect kind of an ABC back up toward that 45.55 area and then come back down and break through like that. So 4,500 would be the next major level should they continue past this 1.0. Again, once they get to 45.45 or 45.44.50 to be technical, 45.65 becomes the number to stay under for the bearish count to stay alive. Now, can this be bullish in any way? Of course. I'm not here to tell you it's exactly doing what it is. I'm here to give you the key levels so you know what you're looking for, and when those key levels break, to adjust your opinion of the market. So, can it be bearish? Yes, we would look for this to be an A, which is how I have it labeled here as the alternate, a B up. And then if they hit the 1.0 here at about 45.45, that would be C down. And that would just be a bigger wave 4, where this wave 4 here would move over, and then we would start wave 5 higher. That is a possibility. I do think it is less of a possibility, but it is possible, and it is something to keep an eye on. 4,500 is really the support that needs to break overall to give us the bigger pullback that we're looking for toward the 43.50 area. And so the upper support, 45.55, has been at least poked through. It hasn't been broken per se. You want to see it follow through. And if they get through that, then we'd look to 4,500 next. And once they break 4,500, then it's a pretty good bet to see 43.50. They've moved up a little higher here, so maybe even 4,400, but you would expect to see another 100 to 150 point drop at least, and then we'll see how they react at those levels. But if they're giving us 5-wave moves and they continue to give us 5-wave moves, the bulls need to be on alert, and you should be very cautious of a bigger move down potentially happening. Over on the NASDAQ, okay, the NASDAQ playing out pretty much how we would expect. You would expect a 3-wave move down, which we got off the top, 1, 2, 3 for A, a 3-wave move up for B, which we got, and then a follow through and kind of a more direct move in C, which we got. And then you'd expect another 3-wave move up, which we got here. And then you'd expect, this would be a B wave of A, and then you'd expect C down to break down into this 15,400 area down here to give us this bigger wave A. And if we see that, okay, then we would be looking for a B wave bounce that would take us back up toward that 15,800 to 900 region. And then we would look for a breakdown in C down toward the 15,200 to 15,000 region if they're going to stay bullish and look for new all-time highs here as we move forward. So if that's going to be the case, you'd be looking for this ABC to play out to the downside for the bears and then the bulls to rally off of that. For the bulls, they're still looking at a potential ABC. We have an ABC down here that could be wave 4. So you look at it this way. You're in a diagonal, so you have A, B, C. This is wave 4. So this 4 right here just moves down. And then you would have this A, and then a B, and then a C back up toward the 16,300 level to be wave 5. So this 5 just moves over to 16,300. This 4 moves down, and then the finishing, the count appears to be finishing. Now, for a lot of reasons, I don't think this will be the case. There are indicators that we use with Elliott Wave that have crossed bearishly. There are signs of weakening. The internals weakened today. They started pretty decent and then weakened and turned negative. So the market is turning over. We're starting to see selling. We're starting to see bearish indicators. We're starting to see turnover, and they're at support. So if the bears are ever going to do it, this is the time. And I do think they'll probably break through here. But again, if they don't, then we'd be looking higher back toward the 16,300 region. And then we would see what we get from there. But we would expect to turn down off of that area. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial because I want you to get in there, make sure you love it, become part of the trading team, and make sure it's for you. Before you ever spend a penny, you can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. This market is irrational and emotional, and it doesn't trade the way you think it does. People think the news matters, but it doesn't make any sense when good news makes the market go down and bad news makes the market go up. With Elliott Wave, you have the key numbers to understand when those numbers break, what happens, and when they hold, what happens. This gives you a clear advantage over the rest of the field and an understanding of the market that people don't generally have. It gives you a way to make sense of an irrational market. It is 25 videos where I go over the introduction, And that's your Elliott Wave Theory expectations, your mindset, the KISS method, and why it works. We go over the chart setup and tools, those indicators I'm talking about, how we use those indicators right here. This is all of the tools you need along with Elliott Wave and how they work. And some of them are what I'm talking about when we're looking at a bearish setup. And then the Elliott Wave for Beginners course, where I go through all of the waves, how they look, what they look like when they are succeeding, and what they look like when they fail, what their targets are, how to measure them, and how to use them, as well as the corrective zigzag, the theory of alternation, the corrective depth theory, the pivot, all the stuff you need to know to understand in a rational market. The really cool thing, guys, is if you don't want to pay the $67, I completely understand. You can get this course for free by becoming a monthly member. In my first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the Elliott Wave for Beginners course. We trade the SPY and the QQQ, and we swing in day trade, which means we do trade quite often. And if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, income trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. It's pretty simple. We've moved below the pivot. The bulls really want to push, the bears really want to push down to 45.44 or below. Once they do that, it activates the pivot, which means 45.65 would be the key number above. Stay below that and complete the pattern to the downside towards 4,500. And the bears are trying to take control of the market. If the bears fail at any point before the 1.0 or after the 1.0 and come back up over this 45.65 area, it does start to look a little more bullish, and we would look towards 46.20 to 30. Over on the NASDAQ, a corrective structure in place as we would expect. We were looking for that from the high in almost any scenario, and that's what we saw. We've got the ABC down, the bounce, and now they're trying to come down and see toward that 15,400 area. If they're able to break this low, that would be the key. 15,725 on the NASDAQ. If not, and they push higher and take out this high right here at about 16,035, and really over 16,100 is what you're looking for, then we'd be looking for 16.3 on the NASDAQ. Guys, that is your market update for today. I will talk to you tomorrow.